Hi everyone, this is Hazem Sultan with Remax Express Realty here in Vancouver, and today I'm happy to be joined again by Reza Sabour, Senior Mortgage Broker with TMG The Mortgage Group. Thank you so much for making the time again.
Thank you so much for having me again.
Absolutely.
Great to be here.
Absolutely. So in this video we're going to be covering questions that we get asked from newcomers and foreign nationals, people that want to buy a property here in BC. First, obviously, Reza has extensive experience working with newcomers and foreign nationals that want to buy a property, whether it's recreational or primary residence as well. So I thought he would be an appropriate person and the right professional to actually have on and discuss these topics here. So without further ado, let's dive into the questions.
Absolutely. Let's go for it.
Perfect. So the first question is, we get a lot of phone calls and emails of people that don't necessarily, maybe they're newcomers from maybe the Middle East, different parts of the world, but they don't have the credit rating or the credit score just because they're new to the country or they're planning on coming here, but they do have a sizable down payment. We're talking 35% and above. Does having that sizable down payment help with getting a mortgage in Vancouver?
Absolutely. In fact, the 35% down payment requirement is actually the minimum down payment required.
The minimum, 35%.
With almost every lender out there,
right,
with respect to the minimum threshold for purchasing a property here in Vancouver as a foreign national or a permanent resident if you're going to use the New to Canada program, which we'll get to a little bit later.
Right.
But yeah, the 35% down payment is helpful because it's required. Obviously, the more down, the better.
Right.
It strengthens the file for the prospective lender, especially if we don't have a credit score. Because in some lenders, in lieu of a credit score, because not every country has a credit rating system, will accept other forms of documentation that sort of prove your credit worthiness. That could be a letter from your financial institution just stating that you're in good financial order, you don't have any delinquencies. It could be 6 months or up to 12 months of credit card or day-to-day banking statements to show day-to-day transactions, to show that your credit cards have always been paid on time,
right,
and that there's no delinquencies. So depending on the lender, they have some different criteria for proving your credit worthiness. And some lenders still actually require you to have an international credit report. And if you come from a country that doesn't have one, they may just say, no, sorry, we can't do that.
Right.
So we have to choose the right lender for the right client, depending on where geographically they're moving from.
Right.
So we kind of try to do all that filtering so that we know which lender to
That's
go
a great
to.
point that you mentioned, because we have a sizable segment of our clientele comes from Dubai or Saudi Arabia, where we don't have a credit rating system.
Yes.
We don't have anything that's in place, but it's nice to know that there are certain lenders that are actually would be able to verify that or maybe be satisfied with certain documents. And we're actually going to get to those documents as well, because obviously if someone has that sizable down payment, can you give us just an idea of maybe a typical lender and what they would require as far as maybe statements and?
Yeah, so if we looked at a major bank lender, I'll just use TD Bank for example.
Right.
They require 35% down for a non-resident. They also, on top of that, require 12 months of mortgage payments. They call it PITH, which is principal and interest payments, basically, with the combination of property taxes and heat, meaning that 1 year, so 12 months of your estimated mortgage payment, plus 1 year of the property taxes, which we can obtain from the city or district that you're moving to,
right,
plus 1 year cost of heating the home, which is usually calculated at about $100 a month, so it's
right,
about $1,200.
Right.
So they want to see all of that money together, so 35% plus those other items, in a Canadian bank account. So the money has to be in Canada. It has to sit in Canada for 90 days prior to the completion date of your purchase.
Right.
So that's very important, because some banks like TD, some of the other lenders out there who are major bank lenders,
right,
are very, very sticklers on that policy,
right,
and won't budge. There are other lenders who may do it with shorter time frames, like 30 days. I've even heard of some lenders doing it with as little as 2 weeks. So it really depends on just the appetite of the lender for that program.
Right, and these funds that are 12 months payments and heat and property taxes, does that amount have to be locked in a specific account, or could it be just...
No, so most lenders don't require you to actually lock that into anything.
Right.
We do have one or two lenders who are on the A side, but they're more on sort of the non-traditional bank side. Like I can think of a lender like Wealth One, Bank of Canada. They specialize in clients who are coming from either China or Hong Kong. So they actually require that the 12 months of payments are locked into like a GIC for that 12-month duration.
Right.
Most bank lenders don't. They just want to see that you have the money, that it's in a Canadian account, and it's been here for a certain amount of time.
Right, right. And the requirement, you mentioned maybe as little as 2 weeks and as high as maybe 90 days.
Yes.
Is there a specific reason why that is, or?
Yeah, so basically it has a lot to do with Canada's anti-money laundering policies that all the banks here have to adhere to. Canada is a country where our banking system is very, very tight-knit and very much heavily controlled by government. So, unlike the United States where there's over 3,000 or 4,000 private banks, we only have 5 institutional banks that are Canadian-operated Schedule 1, and they are essentially abided to follow whatever the government of Canada sets for their policies.
Right.
So the anti-money laundering policy is one of the reasons why this money has to sit here for so long, because they want to make sure that the funds were not just wired overseas.
Absolutely.
From
and
the
it is for good
proceeds
reason. It is for good reason, absolutely.
Exactly.
We want to make sure that money is clean, obviously, and there's nothing that's suspicious. As far as the lenders go, we've got A lenders and we've got B lenders.
Yes.
Typically, for someone that's new to Canada, doesn't have the credit score, or maybe even a foreign national, if they want to obtain that mortgage, could maybe an A lender or A side be helpful to them?
Absolutely, yeah. So the non-resident mortgage program is typically offered on the A side by most of the major bank lenders, and some other monoline lenders do have that program as well. The criteria is largely the same: the 35%, the 1 year of mortgage payments. That's kind of across the broad spectrum of lenders the same.
Right.
We do have sort of an A- to B category as well, which do make that program a little bit more flexible. For example, the bank that I was quoting earlier with Wealth One, they will allow, on exception, for that 90 days of history to actually be shown in your home country. So if that money is sitting in Hong Kong for 90 days, we can provide statements from your bank in Hong Kong. As long as they're in English and they're easily verifiable here, then they will allow that. Now, most Canadian Schedule 1 banks, like the major 5 banks that we have here, will not allow that, and the money typically has to be here in Canada. Some banks will make provisions if the money's in the United States, just because there is an international relationship there between North American banks and institutions. But anything essentially outside of North America, it's very difficult. The money does actually have to be here for the most part.
Another big question that we get asked on a regular basis is, what about the interest rate? Let's say, okay, it's nice, you've got the 35% or even higher down payment. You want to get this mortgage, but what about the rates? Are they sort of market rates, or are they higher than market rates?
Yeah, very good question. So if we're getting this done on the A side with a traditional bank lender, then you're going to get market rates. So you would get the same rate as a foreign national that anyone else here living in Canada would receive. Now, if you're buying the home as an investment property, a rental property, because you're going to be living abroad and this is just purely an investment for you, investment properties in general have higher rates. So that doesn't matter if you're a foreign national or if you are a resident here in BC. If you're buying it as an investment home and you're specifically yourself not going to be living there, then that is going to have a higher rate, just because that's just the nature of investment properties. But just being a foreign national doesn't mean you get a higher rate just because you're a foreign national. The only time that would happen is if we went to an A- or B lender, because they do have higher rates, is that if we had to get the file funded with a B lender, then yes, rates are higher. There's sometimes lending and broker fees involved in those as well. But typically, if it's an A side lender, then same market rates as everybody else.
That's great to hear. So our next question was going to be about the documents and the certificates that are required, but I feel like we've touched on it. But is there anything else besides the 12 months payments, maybe the bank statements, having those funds for 90 days in a Canadian bank account?
It's actually important that we dig into this a little bit more, because for a foreign national purchasing a property here, when you have no intention of residing in Canada, it's very important to understand the lender is going to be looking at your global income in servicing your global debts. So they will look at your income from overseas, as a way of verifying that you can both afford your expenses in your home country. So if you have a mortgage or you pay rent, that number and those liabilities will have to be factored here into your application for the home that you're purchasing. So your debt, your income back home has to service your existing debt related to your housing expenses, and the debt that you're taking on here in Canada related to the housing expenses of that asset.
Right. Is that specific to certain types of lenders, or is this across the board?
It's going to be mostly across the board on the A side. Now on the B side, sometimes there's a little bit more leeway. They may look at other forms of verification. You know, they may just do it with a much higher down payment, or they may do it with a much higher rate and less requirements. You know, the B side has flexibility and negotiation room. On the A side, typically we don't, and you know, there's set programs.
So another question that we have is, let's say we've got a foreign national that wants to buy a recreational property, let's say maybe a condo in Cole Harbour, for instance. What are the requirements there? Is it any different than maybe just buying a principal residence for a newcomer?
So in terms of buying a recreational property, if your intention is not to rent it out, if your intention is to have it as a second home or vacation home for yourself when you're in Vancouver or in BC, the down payment requirements and those things are largely the same, because those are based on your residency. The fact that you're a non-resident is what stipulates that criteria. But you have to also make sure that you speak to a really good real estate lawyer, a good accountant, because you want to understand taxation as a foreign national, how that's going to impact you here in BC, here in Canada in general. We do have something called the essentially non-resident tax, which right now is at 20%. It's a very, very hefty tax. Used to be 15%. When the NDP took over here, they made it 20%. The goal there is to deter foreign ownership of homes here when they're left empty, or when they're taking away from the rental stock that local people then can't essentially rent. But if you're buying it with the intention of spending time here and you're going to be here several months out of the year and it's truly a vacation home, you know, there are programs for that as well. Now, some lenders, like Scotiabank comes to mind, they will actually not do a investment property purchase for a foreign national, so it cannot be a rental property. It has to be either a vacation home or a second home, which means we cannot use rental income to help you qualify. A lender like TD, for example, they do allow you to have a investment property, and so we do have the ability to use the rental income from the property to help you qualify.
Right, and just to add to your point about the foreign buyer's tax, which is 20%, so this only applies to residential properties, and then to certain regions as well. Another region that comes to mind where the foreign buyer tax does not apply is the Squamish and Whistler region. So if someone wants to buy a property there, let's say it's a principal residence or even a recreational property, and we don't have this 20% sort of in the picture there, does the qualification or the process differ?
Not really from the qualification perspective again, because again it defaults back to the residency. So, you know, if you're not going to be residing here and even if you're a Canadian citizen but you're living abroad and that's your primary residence abroad, you are technically a non-resident from a tax code and also from the lender's perspective. So it's really important to understand that and make sure you're getting the proper advice from an accountant before you make that decision. There are certain jurisdictions, like as I mentioned, where you don't pay that tax, and there are certain jurisdictions where you do pay that tax. So that could be a deciding factor for you. Because 20% on the purchase price is a whopping amount of money.
It is.
In addition to the 35%, in addition to the one-year mortgage payments and property taxes and heat and all the other expenses.
It adds up.
You know, it really does add up. So.
Perfect. And what about just sort of general tips or pointers or any advice that you'd like to offer to newcomers or people that are buying property here in Vancouver for the first time?
Yeah, so one thing we didn't really touch on too much was the Newcomer Program. So the Newcomer Program is if you have a permanent resident card, you have to physically be in possession of your card because the lender will want to see the front and back. But let's assume you're a newcomer, you're a permanent resident, you've arrived here. You have two options. If you already have a job and you have income and you have a salary, then you can qualify with the same guidelines as anyone else who resides here, whether they're a citizen or they're a resident.
So you would not be subject to the minimum 35%?
No, you would not. 20%, you could buy with as low as 5% if you're buying a home under $500,000, for example. So you'd be looked at the same way anybody else here would be looked at. If you don't have a job, but you have a stream of income coming to you still from overseas, that's going to be ongoing for a while until you get yourself set up here. There is something called the New to Canada, sort of a one-time program, which most of the major bank lenders have. Again, you're required to have your permanent residency. You have to be a permanent resident for less than 5 years on the date of your entry on your PR card.
Right.
And then they will allow you with 35% down, 1 year of mortgage payments, all the same things as the foreign national program, to have a little bit more flexibility in obtaining your very first property. As long as it's your principal residence, it cannot be a rental property, so you have to live there. Where they'll do a little bit less reliance on your income. They still want to have some form of income, and they still want to have an understanding or a good story as to how you're going to make your mortgage payments. But they'll give you that leeway as long as you've got that down payment and the sort of history that has been established. So you do have to, in that program, most lenders require you to have established at least 1 or 2 trade lines, meaning that you have to have a credit card. It could be a student credit card, even if it's a $500 limit, that's okay. As long as you've got some form of credit established, and maybe if you're renting, we can get a letter from your landlord that says that your rent has been paid on time. So those types of things, again, has some flexibility under that program. And that's another program, but that's specifically for people who do have their physical PR cards.
Right. And essentially just having that PR actually does, like you mentioned, open up a lot of doors as far as mortgages go. But also, I just want to add one little bit of information there. So if you're buying a property residential, because I've had this happen to me personally, not only do you need your PR card, but you also need to update your Syn Number as well. So Syn Number, typically when you come here on maybe on a work visa or a student visa, you have it starts with 9, exactly, right? So obviously just make sure that that's updated, just to sort of avoid sort of last minute hurdles with the conveyance of the property. So
yeah, because often if you're here on a work permit, you're technically still a non-resident because you don't have residency here. You will have a Syn Number that starts with 9. Lenders don't love that because it basically solidifies the fact that you don't have anything established here yet. And
it's a filtering tool.
It's a filtering tool, So as soon as you do get your PR, very, very important and great point, go ahead and get your Syn Number converted to a permanent resident Syn Number, which then will be your Syn Number for life, even when you become a Canadian citizen. And that usually starts with a 7, or I don't know if they have another number now.
I think that's about it.
When I came to Canada,
unless they're going to add another one, maybe. You never know.
So
fantastic. So obviously, just to sort of allude to the point that you mentioned earlier, when it comes to a residential transaction, it is complex, but when you're dealing with a non-resident transaction, the complexity and the depth of complexity is even greater. So it's super important to assemble that right team of professionals. We're talking about a lawyer, a CPA, a mortgage broker. Have that discussion early on and know what to know, what to be privy to, because like Reza mentioned, we've got this 90-day period where the funds have to be sort of not locked in, but they have to be in a Canadian account. If that applies to you and the lender that you're applying to requires that, then you have to be aware of that from the get-go, right?
Absolutely. So you want to have a very solid understanding, and of course on the real estate side too, I've always said to my clients, make sure you're working with a real estate agent who actually has done transactions with foreign nationals or newcomers before, because there's a lot of things in your world that are also very unique and different for a foreign national that an average realtor may not know. And then you can end up getting into a bind where you're running out of time on a transaction.
It's a huge purchase. It's a huge, when you're uprooting your family from a country to another, and sometimes even from another continent to another continent, that's a big deal. And it's important to work with someone that really does understand the challenges and have gone through them personally as well. But thank you so much, Reza, for stopping by again.
Thank you for having me again.
Absolutely. And I'm going to leave a link to Reza's digital business card as well. You can definitely reach out to him. He's a wealth of knowledge. As like we said, when it comes to foreign nationals or newcomers, he's done quite a bit of business in that regard. So you can definitely reach out to him. Any questions? The timeline might be a little bit longer, but that's totally fine. You can reach out to us, get the ball rolling, and then we can definitely assist you.
Absolutely.
All right. Thank you so much, guys.
Thank you.
All right. Bye.